how much weight do you care about as a tactical active swing trader? How much do you care about what the SPY or the Qs are doing?
It's a great question because a lot of times people will confuse their stock with the market. And, is it a stock market or is it a market of stocks? Now, there's that study that's been done, 70% of a stock's movement will come from the the direction of the overall market. I don't agree with that, but 20% will come from the index and 10% the individual stock. If you're buying a true leader in, let's say, the semiconductors, you're going to buy the stock that breaks out before the semiconductor index does because it's dragged down by all these other ones. So I take a bottoms up approach, an individual stock basis. And I learned a long time ago that I would see an opportunity. I'd see a stock that looks set up great technically, but then I'd be worried about the market. So I'd pass on the trade. And then the stock would go up and I'd be sitting there not making money and saying, I knew it, I knew it, I knew it, I knew it. I should have done, would have, should have, and all that nonsense. So I learned also a while ago that, if I view the market as having risk that might affect my position, I'll simply lower my risk unit. So instead of risking $1,000, maybe I'll risk $500 on that trade or whatever your risk unit is. I'll say, I like it, but the market doesn't agree with this, but it's a great setup. I've seen this setup work 1,000 times before. I'm going to get involved with a tighter stop and less dollars, at risk where my stop goes. And that's one of the things that helped me a lot. And one thing I used to get hung up on a lot of times in the past was, waiting for volume. And I alluded to that a little bit ago, that if it's just breaking over that little short-term resistance, other people are waiting for volume. They're like waiting and waiting and waiting, and by the time they get that volume confirmation, it's often the stock's gone 3-4%, and I can take a third of my position off, and now my risk on the balance goes to break even. So even if I get stopped out of the balance, the 2/3 at break even, I'm still going to make a little bit of a gain because I've reduced my exposure with that first third off.
Yeah, that makes total sense, and I think that SPY distinction or markets distinction, I think that hangs a lot of traders up. And you're saying for you, I mean, for your time frame and style, obviously everybody might have different approaches, of course, but it's independent. It's stock. I like the example you gave of if you're buying market leaders, I mean, something's got to lead, right? Something
Right.
has to start the move. And so you want to be there when that move starts. So that makes a lot of sense. And I think that, certainly can give some confidence to traders. So to round that point up though, I mean, if you see the SPY in like a 3 or 4 day pullback or 5 day pullback, I mean, you're not going into, I'm only going to go into sell stock mode. You're still going to take long setups in individual stocks. Is that right?
Yeah, especially when the primary trend is higher. And if
Yeah.
we were in day 4 or 5 and you're looking for shorts, you're late.
Yeah.
It's
Yeah.
like looking for breakout stocks after the market just ran 4% in three
Yeah.
days. You're a little bit behind. You've got to be more anticipatory and not so reactive to what the market itself is doing. Each stock based on its own merits. Don't get hung up on, well, the dollar's doing this and China's over here doing that. Who gives? How does that affect this stock that I'm in right now?
Hmm.
Most likely it doesn't. And the luxury of the time frame that makes most sense for me, which is swing trading, and I define that as it's a day trade if it's wrong,
Hmm.
and maybe up to 2.5, 3 weeks is generally about the maximum for me.
Hmm.
So for that time frame, I don't have to worry about monetary policy unless the
Sure.
Fed meets tomorrow. I'm not going to put on new positions in front of that, or Jackson Hole's coming up. I'm not there this year, but whatever they call that
Yeah.
event. So it's each stock on its own merits, I think. And if there's bigger risks that you perceive due to the market, scale down your risk unit.
Hey, it's Evan here. I hope you enjoyed this clip from our full-length interview. Don't forget, if you want to hear this entire episode with even more insights from our awesome guest, you can find it by searching the Smarter Trading Podcast in iTunes or on your favorite podcast app. You can also find all of the show notes for this episode by heading to thetraderisk.com/podcast. Thanks for tuning in.